Okay. Will you say and spell your name, please?
Yes, it's Greg Welk. That's GregWelk.
Okay. And just as a start, would you give me the kind of thumbnail sketch of your life, who you are, where you're from, what you do, and just kind of what the trajectory of your life has been?
Sure. So I'm 27 years old. I was born and raised in Omaha, Nebraska. I grew up there until the age of 18 when I moved to Boston to attend college at Boston University, where I received a degree in economics. Subsequently moved to Chicago, Illinois to work for a large retail brokerage firm, and then moved to Boulder, Colorado to work in a similar industry.
Okay, and that's what you're still doing?
Still doing.
Okay. I have been speaking to people, all different kinds of people all over the country, and asking them to talk about our current moment in America. And everyone has really strong feelings, or seems to, that this is kind of an extraordinary moment. But there's no necessary agreement about what's important about it, or what the significance is, or what is important about what's going on. So as a start, could you just talk to me about what the phrase "our current moment," what does that mean to you? What seems important about where we are right now?
I think and I suspect that we're in a time in our history that has been unlike anything that this country has seen for the last 50 to 70 years. Longer, 60 to 80 years. I think that over the course of that time, since the 1930s and 40s, we have become accustomed to an overwhelming period of growth, sustained growth, and increase in living standards, and just overall increase in our situations, economically, socially. We've lived in very good times. And I think that, and I get the sense that that has in some way come to an end in the past 10 years, slowly. Starting with the dot-com bust in 2000 and proceeding through to where we are right now.
Mm-hmm.
This moment, I think, I think it's a segue into a period where we won't enjoy the same level of growth and same standard of living that we've enjoyed in the past. Mm-hmm. Same benefits and increases. I don't necessarily think that the world's going to fall apart, although it's always possible. I just don't foresee it being as good as it has been in the past.
Uh-huh. I want to talk to you about the work that you've done in the kind of financial realm. But first, let me just ask. I mean, since you are pretty young, do you feel that your own expectations have changed in the last few years?
Yeah, absolutely.
And how so?
I think that in terms of potential for obtaining and retaining a good job, a secure job, has been brought more into question in the last 2 to 5 years.
Mm-hmm.
I don't feel as secure as I once did about my overall prospects.
Mm-hmm.
It's certainly not as easy to go out and find employment and opportunity at any level as it was 5 years ago.
Mm-hmm. You got out of college 6 years ago, or 5?
I got out of college in 2005, May 2005.
Oh, okay. So 4 years ago. Okay.
4 years ago.
Uh-huh.
4.5 years ago.
Mm-hmm.
So, relative to where I was in college and seeing the opportunities that are available now and for the foreseeable future, again, I don't think it's as good as it once was.
You studied economics in college. Was that with the expectation that you were going to go into the kind of work that you're doing now?
Yeah, absolutely. I've held jobs and internships in the financial services industry since I was a junior in high school.
Wow.
Working primarily on the retail side.
Mm-hmm.
So I've had a lot of interaction with customers. I've had a lot of interaction with people that are dealing with the customers. And I've seen a lot transpire over that time.
Yeah, well, let's talk about that. I was going to start with your experience in Chicago, but if you want to go further back, that's fine with me. But kind of walk me through the kind of work that you've done and how the world has looked over that span of years that you've been doing this.
I first got interested in finance and financial services, I guess, in the late 90s. That's kind of when the tech.com, I guess, bubble, but boom at that time, really took off. And you saw people getting rich overnight in the stock market. Yahoo, I remember in particular, was the hot commodity back then. And just hearing stories of people that I knew that had acquired stock, paper, in a company at $1 or $2, only to see it multiply 100 times, $100, $200. So that piqued my interest. As a result of that, my junior and senior year in high school, I started to take accounting classes, which were offered at my high school. I don't think that that's necessarily common, but and managed to land an internship with a financial services company in Omaha over the summer, doing primarily clerical and office work. But through that, you learn a lot. Dealing with customers, understanding their concerns, seeing how people react when the market doesn't behave favorably. And through that, I just kind of continued on. So I got into college, I studied economics, I held an internship with a brokerage firm in Boston, doing similar stuff, working on a lot of marketing. And that kind of segued into my eventual position after college for about a year with a large brokerage firm in Chicago. At which point I became licensed to sell securities and other financial products, mutual funds, bonds, pretty much the entire spectrum of investments. And through that, I've seen a lot. After exiting the retail brokerage business, I got into the trading side, which is where I've been in the last 3 years.
Okay. Let's go back. I mean, you've been around then long enough to actually have been through a couple of busts, right? So you were either doing internships or something during the first kind of the burst of the .com bubble.
Right.
Can you just talk about like what that was like and kind of among you and your colleagues, first of all, what was it like for the culture of the industry when that first kind of wake-up call came, but also maybe some of the customers that you were dealing with?
So I remember in 99, 2000, first seeing kind of the social impact through my parents. My parents I would classify as middle to upper middle class.
What did they do?
My mother is a nurse by trade and has since gone into administration, hospital administration. My father has worked in a number of different industries, the airlines for 15 years, working as a ground crew member and front desk member, and then eventually into telecommunications.
Okay. Are they both from Nebraska?
No, my father's from New York City.
Oh, okay.
And my mother's from Iowa.
How did they end up in Nebraska?
My dad was in the Air Force during the Vietnam era. He spent some time in Pakistan doing intelligence, I guess against the Soviets at that time. and he was there for about a year and a half. And after returning from Pakistan, he ended up in Omaha, where there's a large Air Force base.
Okay, so you were saying that you saw in their lives, you saw some shifts kind of registering.
Yeah, and this kind of feeds into what's happened recently. These are people that, made a decent living by working hard, training hard, weren't necessarily in the upper echelon of society, but had been prudent with their money, saved regularly, didn't spend lavishly, and managed to build up a sizable nest egg, which, at the encouragement of the investment professionals that they employed, to invest in the stock market according to certain rules and methodologies. And they did that, and like everybody else, or a lot of other people, in 2000 to 2002, I guess, they saw an upwards of 40 to 50% of their savings decline. And over that period, I guess, that's when I really became in tune with the idea that asset classes, whether it's the stock market, oil, other commodities, housing, doesn't always go up.
Right. So for your parents, obviously that will change the way they have to think about their retirement years, but has it affected the way they live? Like, do they live differently?
Yeah, absolutely. So during the 90s, vacations were regular business, home upgrades, and when things like that, buying new cars, not, again, in my family, not lavish.
Not extravagant,
but you enjoy the benefits of rising asset prices, I guess. And that's just common nature. I mean, when people expect to be richer in the future, it affects their current consumption. And I saw that in 2000 to 2002 is when I first started college, so I probably didn't see it as much after I left, but I could see it starting to kind of unfold before I left. Just cutting back on certain things, maybe not eating out as much, not necessarily buying new clothes when it wasn't absolutely necessary. So that was the first time around.
And then from inside your office or the various places you were working in those years, what did you see kind of within the financial world? Well, first of all, how freaked out were people in 2000?
Pretty freaked out. I think as with the housing problem that ensued, people became complacent, and they fell under the false impression that the good times would continue forever. And if history serves as any precedent, that just simply isn't the case. It's not possible. So people were upset with the people that were managing their money. They're by far the easiest target. Customers can't go out and yell at the stock market as a whole, but they can call their broker up and yell at them. I've heard stories of brokers not showing up for weeks at a time and eventually just quitting, disconnecting their phone lines because they can't take the stress of dealing with irate and angry people who have lost hundreds of thousands, if not millions of dollars.
Is the culture of the industry such that how are brokers encouraged or trained even to think about other people's losses? Like, is it something that you internalize as your own responsibility, or how do you think?
I think it varies from person to person. And through my experience, going back even to my high school years and dealing in this industry, at least on the retail level, I can say that first and foremost, a broker's job is not necessarily to prudently manage people's money. It's to sell products. It's to bring in commissions. It's to call as many people in a day so that you can convert your contacts into customers. The investment side is generally handled at the corporate level, where people who are in maybe an investment decision or division make the ultimate decisions, and that's kind of passed down to the individual brokers. In terms of analysis, it varies from broker to broker. There are certainly good brokers out there, but generally I would classify a good portion of them, and the ones that I've dealt with, as glorified salesmen.
Okay. So let's fast forward a little bit to the more recent, the downturn of, I guess, I mean, in terms of the general public, we think of it as around October of 2008. I don't know within the industry how you would date it, but the more recent downturn. Can you talk to me about your experience with this one, and especially kind of how you became conscious of it,
Right.
and also became conscious of the scale of it and the scale of what you were seeing.
Okay, so when I worked for the brokerage firm in Chicago, which started in May of 2005 and went for about a year, I underwent my training, formal brokerage training, but I found that I was more interested in the research and analytical side of the business than I was in, again, being a glorified salesman. I really didn't like that side of the job, so I found myself reading a lot of the material that the brokerage firm had access to. And in 2005, I can remember in particular, I was reading a piece by, I think it was Stephen Roach. He's the head economist, or was at the time. I'm not sure if he still is, for Morgan Stanley. And he had produced a large piece on the impending housing bubble. It was no secret at that time. And through my study of economics and history, I was aware, and after 2000, seeing what happened, that bubbles occur, and that the housing at that point was becoming overblown. I would walk through Chicago, and I can remember all of the condos that were under construction. And I couldn't help but think that if demand dried up in any way, shape, or form, there would be a glut of supply, and it would drive prices down. So I would say that I was aware of it as early as 2005.
Was it ever discussed? Was it a subject of conversation at that point, or
in our weekly meetings? Yes, to some degree. There were some wholesale representatives from different institutions that would come in pushing their products. And I remember that there was one group, I can't remember who they were pushing a product that basically benefited if the housing market went down. Which, that's part of the investment game, is speculation. You can bet on assets going up or going down. And both can be beneficial in certain environments. Conversely, I've attended all-day seminars about collateralized debt obligations and collateralized mortgage obligations, and how they were the best thing since sliced bread, that they were completely safe, that it was a perfect asset to put clients into, especially older clients who were reaching retirement age and needed a steady source of reliable income. I remember one of the reps saying pretty much that these are mortgages. It's no big deal. They're completely safe. And we later know that that wasn't the case.
Right. So were you suspicious at the time, or?
I was, and I never helped put any clients into those products. Some people did, but it wasn't a focus for me. I think in that respect, I was aware, maybe ahead of the curve.
Right. So 2005, you kind of see something on the horizon that looks like possible trouble. How does that kind of unfold over the next couple of years?
Right. So in 2006, I was certain that, and just based on looking at the time series data, everything from auto sales to new home sales to oil inventories, pretty much all of the common indicators that people in the industry or investors, traders look at, and you could see that they were rolling over. Further, the yield curve, which is often looked at for indication of recession or growth or boom, I guess, was inverted. And the likelihood of a recession occurring after the yield curve is inverted is great. Mm-hmm. It's like 11 out of the 13 recessions prior to this were first indicated by an inverted yield curve. Now, the yield curve was inverted in 2006. Mm-hmm. So, there were signs, certainly signs. Did I know that the decrease in housing prices would ultimately bring the banks to their knees to the extent that it did? No, I didn't see that in 2006.
So when was the first time that you actually did start to see that happening? And, we'll just...
Right. So a lot of my work in the last 3 years has been focused on technical analysis, which is basically studying chart patterns, volume and price, to get an indication of what might occur in the future. And that's based on the patterns that have occurred before. Mm-hmm. Some people look at it as gazing into a crystal ball, but I am convinced at this point, and based on my experience, that it does merit attention. Mm-hmm. And at that point, in addition to signs of economic indicators rolling over the inverted yield curve, you were starting to see chart patterns that that had been seen before that were bearish, mm-hmm. particularly in the financial indices. Mm-hmm. They were putting in telltale classic signs of a negative future. Mm-hmm. So I would say that at this point, I think in the news you were starting to see some signs that not all was well in the housing market. So I got a pretty comprehensive picture at that point that something wasn't right.
Mm-hmm. And as it unfolded, did it become worse than you expected? Did it never get as bad as what you thought was going to happen? I mean, clearly a crisis for millions of people.
Right.
I mean,
I didn't expect initially that the stock market would fall all the way back and below where it was in 2000, which essentially means that the average investor, including people like my parents, were no better off in 2000 in terms of their investments than they were in 2010. And if you factor in inflation during that time, they were significantly worse off because their purchasing power had decreased significantly. Mm-hmm. Well,
what has the inflation rate been over that decade?
Well, with the steady decline in the dollar and increase in commodity prices, it's certainly been more pronounced than what a lot of government figures will indicate. Consumer price index often excludes oil, even though it's a primary input into our economy. They say that the trend rate of inflation is 3.5%. And I believe over that time period, the average was that, if not higher.
Okay,
yeah. And if you compound that over that 10 years, you get an idea of the kind of wealth destruction that can yield. Mm-hmm. Mm-hmm. Sorry, where were we?
No, that's okay. Yeah, so we were talking about once the crisis hit, like how it looked from inside your office. just if you can reflect a little bit on the nature of your workday,
Right.
How.
So for the past 3+ years, I've been working in essentially a day trading environment. So we enter positions during the day, but we rarely, almost never, hold positions overnight. So through all of this, the firm that I've been working for, we've come out relatively unscathed until recently, which I told you about earlier. But so in that respect, we were very lucky to not be holding overnight for several weeks, months, even days at a time. I think at its worst, the Dow Jones Industrial Average suffered a 400+ point loss in a single day. The moves that I saw staring at the chart all day were, in a lot of ways, unprecedented, but I didn't really have anything to compare it to initially. But sitting through it day in and day out, you came to realize some of the major moves. In terms of seeing the social impact of it, I never really studied that too much. I mean, I certainly knew that declining housing prices, declining stock prices, increasing unemployment would have dire consequences, and there would be a negative feedback loop that would ensue. So, I saw this unfold from the beginning of 2007, which marked the highs in the stock market, and even before then. So it wasn't a surprise to me that in 2008, in the latter part of 2008, when they finally came out and said that a recession had in fact started in late 2007. And that further confirmed what I saw in 2005 from Stephen Roach and the Morgan Stanley team, that a slowdown was imminent. So, I kind of saw it all unfold.
Has it? Well, I have a bunch of questions.
Yeah.
Let's see if I can put them in the right order here. The first one has to do with what you said at the outset. You said your own kind of personal expectations have actually changed through this period. Do you think that that's a common experience for people your age? Like, is it your sense that your generation has kind of gone through this and come out the other side with a different way of thinking about the world and the future?
Yeah, absolutely. I think that, and I think a lot of people I know share this sentiment, that we're not necessarily going to be like our parents and after a recession go back and work 70 to 80 hours a week just to even come close to breaking even or getting back to where we were. I think that in that sense, we're a little jaded. I'm a little jaded. I know a lot of other people.
Yeah. Can you say more about that?
Yeah, I just think that, after something like this happens, and if we do enjoy some type of recovery, it's going to be similar to what we saw after 2000, that a lot of people went back to work, but oftentimes it was for less money. And, their balance sheets had been hurt with the crash of the dot-com bubble. Employment certainly wasn't as certain as it was before. And they weren't getting paid as much. And I think the same thing has happened this time around. I know that I'm not going to be able to get a job as easily as I was able to once I got out of college, and I certainly won't get paid as much. And looking 5 to 10 years in the future, I can't really say right now that it will get much better, absent any serious improvement in my own skill set. If that makes sense.
Yeah. Has this in any way changed the way that you think about capitalism systemically?
You might not like this, but I I'm exceptionally disappointed in the policy actions that have been taken throughout this whole crisis, or whatever you want to call it. I personally think that a lot of the stimulus wasn't a great idea. I don't think that the bank bailouts were a good idea.
I want to hear more about that, but you can keep going with your list first.
I think that there's a lot of favoritism in Washington, just as there was under the Bush administration. I think that you're seeing some of that in the current administration. And I think that in a lot of ways, if we had let things kind of fail to a certain extent, more than what we did, in the long run, we may be better off.
That's interesting. I want to hear more about the kind of alternative history, if you will. Like if we don't bail out the banks, just kind of play that out for me. What's the string of events that flow from that?
So, I need to look up the statistic, but prior to this all happening, there were certain rules in place that would not allow any one single financial institution to hold over a certain percentage of the nation's total deposits. Bank of America surpassed that 2 years before everything blew up, and nothing was really done. And it's been shown time and time again that if you get institutions that are so big that dominate the market, they crowd out competition, and they're susceptible to problems. Like anybody else, they become complacent. They assume in their models that housing prices will appreciate 3 to 5% per year in perpetuity. And like any other business, they make investments, they make strategic decisions, and they bear the consequences of those decisions for good or for worse, for better or for worse. And that's, to me, that's kind of the American way. I've started businesses before. I've failed at businesses before. I've known people that have done the same thing. But they haven't necessarily gotten a handout from their taxpayers, their peers. So, as with GM, the banks, it seems to me that we're kind of defying our principles, our economic principles, by giving money to failing institutions.
I understand, and I think as many people do, I understand the principle that you're articulating. I mean, nobody's completely comfortable with the idea of bailing people out, because there are good reasons for the failures. On the other hand, it still leaves a question of kind of what are the ramifications of that kind of crisis. If you let Wachovia or your Bank of America or Citibank or whatever combination of these, if you go ahead and just let them collapse, what happens to people's lives?
Right. Well, and I think this brings up another issue that as a society we have become too dependent on debt and therefore on the banks to sustain our standard of living. 2 years ago, before all this happened, 2.5, 3 years ago, the savings rate actually went negative, which again, along with the inverted yield curve, the time series rolling over, was another negative implication. Because people were betting on housing prices and stock prices to continue skyrocketing and fund their ever-increasing consumption. And there is no such thing as a free lunch.
Right.
You can't count on that. But instead, people were borrowing money from the bank and assuming that would just pay off. Taking that money and investing it in certain things, thinking that they would get essentially a free return on their money without doing anything. And again, throughout history, that's proven to be wrong. So if people take on debt that they can't afford, or they don't plan for the future, the fact that maybe they'll get laid off, or they extend themselves beyond their means and get into an adjustable rate mortgage or some type of exotic loan, and they don't plan for it, shame on them.
Mm-hmm.
I don't believe that it's right that that I should have to bear the responsibility for their poor decisions.
Mm-hmm.
And the poor decisions of the banks to fund those kind of loans, to extend that kind of credit.
Mm-hmm.
It just seems there's something fundamentally wrong with that. And if we back these institutions up as we have, it gives them an implicit guarantee in the future that they can continue as they have been, enjoying all of the rewards with very little risk of failure.
Right. Is that what you see happening?
Yes, absolutely.
Mm-hmm. So what's your outlook? I mean, as you look ahead 5 years, 10 years, I mean, what do you think is going to happen?
I think that we're going to be stuck in sort of an economic malaise. I think absent any real major altering technological innovation, and I think that that's certainly possible, alternative energy, alternative forms of transportation, different ways of living, basically rethinking and retooling how we live and how we work, or some type of major efficiency enhancement. I don't foresee things being as great as they once were. I don't see growth returning to what we've enjoyed in the past.
Mm-hmm.
I think, and a lot of people compare it to Japan after the real estate crash in the 1980s. I mean, Japan is still kind of stuck in a subpar economic growth environment with an aging population that really isn't going to put any upward pressure on consumption, which I think is going to happen here.
Mm-hmm.
So generally, I don't necessarily know that things are going to go to hell in a handbasket again, but I wouldn't rule it out.
Uh-huh. Okay. Also, I mean, so let's back up a little bit. You talked about your disappointments with certain policy decisions, but going back even further to the onset of the crisis itself, could this have been averted, or how could this have been averted?
Right, so the real estate bubble was fed primarily, and it was kind of an externality or a consequence of Greenspan and company lowering interest rates in response to the 2000 recession. Interest rates were lowered to around 0% where they are right now. And when you make money that cheap, you can kind of espouse a bubble, which is what happened. And I think part of the reason it went into real estate is because people were averse to the stock market. You couple that with banks finding new and innovative ways to make money, to sell, to, I guess, obtain the borrowers, and do it quickly, not always conducting their due diligence, in a lot of ways being fraudulent in their underwriting process, and then turning around and selling it to Wall Street or to investors who are more than happy to pick it up, and it's billed to them as being safe.
Mm-hmm.
Again, in my meeting about collateralized mortgage obligations, that these are safe investments. It kind of brought about a vicious cycle, but I think that all kind of started with really low interest rates caused by the Fed and foreign money coming into our market.
Mm-hmm.
The rest of the world generally are savers, and we're not. And so...
Is that something that is going to change?
I think to some degree, and if the dollar continues to decline, it's going to devalue the investments that foreigners have made in the U.S., and I think that that'll change. People will start pulling out, or they won't be as friendly when it comes to lending us money.
Mm-hmm.
They're going to demand a higher premium
Mm-hmm.
for it, which means a greater interest rate on their return and a greater interest rate that we are required to pay in order to borrow. And
Right.
higher interest rates lead to less capital formation. If that makes sense.
Right. So, but do you see that as kind of necessary medicine for us?
Yeah, absolutely.
Mm-hmm.
I think it's similar to some of the banks being allowed to fail, which some of them are.
Mm-hmm.
But unfortunately, it's not always good that all the small guys fail. Because in the future, what does that imply for competition?
Right.
And competition provides us with a lot of innovation and better access in the banking industry to credit. People find better ways of doing business than what some of the older established institutions have in place right now. So,
Mm-hmm. Mm-hmm. Okay. A couple of things that we haven't talked about yet. Aside from the economics of the moment, other things that people say about this period that we're in. One is the kind of post 9/11-ness of it,
Right.
and another obviously is the election of Obama. Could you just talk about both of those things from your own point of view and kind of what your experience is of those two aspects of contemporary American life?
Yeah, so I don't think anybody will forget 9/11, the day itself, where they were, how they heard about it, and the utter shock of it. And then the anger that ensued after that, and the realization that in a lot of ways we are at war with an enemy, albeit maybe small relative to prior enemies that we faced, that is hell-bent on killing us, on the destruction of our way of life, and therefore the rest of the world's way of life. I think that subsequent to 9/11 and the way that the war on terror is played out, it hasn't necessarily been to the benefit of our country. We've expensed, we haven't invested billions and billions of dollars in wars that don't really seem to have any tangible benefit. So, in that respect, I think that the execution of the war on terror and trying to prevent the conditions in certain parts of the world that led to people boarding our planes and crashing them into our buildings has been pretty poor.
Mm-hmm.
I think there has likely been some good that's come out of it, but it's been overshadowed by a lot of bad.
Mm-hmm.
I think that in terms of the court of public perception on the world scale, Obama and his election was positive. I don't necessarily agree with all of his policies,
Mm-hmm.
which you kind of alluded to earlier, but I think in general, the positive benefit that it provided to our image and helped to restore to our image was probably worth it.
Mm-hmm.
And I'm hopeful about a lot of his initiatives. I think that instead of expensing things again, he's focused to some extent on making investments in education, investments in infrastructure,
Mm-hmm.
things that'll add to our capital base, our human capital base, that will provide us with increased capacity for better, greater production in the future.
Mm-hmm. Mm-hmm.
So I think that he's a step in the right direction.
Mm-hmm. The policy things that you talked about earlier, were those disappointments to you in the sense that you had higher hopes and expectations for him, or?
Yeah, one thing in particular, and it kind of goes hand in hand with the bank bailouts and the auto bailouts. I don't agree with giving people $8,000 to get into debt and buy a house. I don't agree with that. I don't think that I should be paying to help people modify their mortgages because they made a bad decision. I don't think that we should be destroying old cars that could be used in some type of productive capacity. I mean, literally disabling the engines and buying new cars for a lot of people getting further into debt.
Mm-hmm.
I just don't agree with that. I do agree with going in and maybe partially subsidizing housing efficiency, energy efficiency. From something simple as recaulking a window to installing a new window.
Mm-hmm.
I think that that's great because that's an investment. It's going to save us money in the future,
Mm-hmm.
money that we can devote towards other things and invest and guarantee or further our future. But some of the things, it just kind of seems like a one-shot deal used to prop up a housing market that has a lot going against it.
Mm-hmm.
And it's just a temporary measure. It's kicking the can down the road.
Right.
And it's the same with, again, the Federal Reserve lowering interest rates to near zero and going even further than that and actually going into the markets and manipulating, the price of housing bonds. I just don't agree with it.
Mm-hmm. Even despite your own qualms with some of his policies, has there been anything surprising to you about the fury of the opposition to him?
No, not really. I mean, I guess, and especially through some of the stuff that you saw in the Bush years, you kind of come to expect it.
Mm-hmm.
I think that some of the people that deny we have a healthcare problem in the United States are just absolutely not in touch with reality. I think some of their views on his foreign policy might be spot on. For instance, the guy that tried to blow himself up recently on Christmas Day, I don't think he should be tried in a U.S. court. I think he's an enemy. He's a soldier against our country. In World War II, if one of the German soldiers got up on our airplanes and started shooting people, he wouldn't receive a trial. So there, and I think that type of thing is kind of voiced by some of his opposition, and they're very outspoken about it. I think a lot of it is just way far out there that it doesn't even merit listening to or entertaining. I try to listen to everybody, but
I'm interested from a kind of generational perspective how you think about the political realm and what your expectations are for like what's even possible in the realm of politics.
Right.
Do you feel like your cohort was kind of born jaded on that in that respect, or is there any kind of idealism there?
I think there's some idealism there. I think in a lot of ways we feel powerless right now because we just don't have the control that the older generations have over the electorate.
Mm-hmm.
We just don't have the numbers. The population in certain age groups has been declining, for however long since the baby boom generation. So, if the baby boom generation wants to vote in certain measures to prop up the housing market for the next 20 years even, at the expense of us paying huge taxes and interest in the future when they're long gone, I mean, sadly, they don't necessarily care.
Mm-hmm.
And so, in that respect, that's frustrating, being a person my age.
Do you think that's a common... I mean, I'm struck because what you're saying has such a kind of long view, which is not what young people are known for. Right, but here you are kind of chastising your elders, saying, you guys are really not thinking down the road. Is that just kind of unusual to yourself, or do you think that that's a common way that your generation is looking at these things?
I think it's probably uncommon, but at my core, I'm a student of history, I think. Prior to deciding I wanted to study economics, I was a history major. And I think that we really lack, as a generation, that historical perspective. Being able to know that bubbles have happened before.
Mm-hmm.
An oil bubble happened in the 1980s.
Mm-hmm.
Bubbles have been happening since business cycles started happening however many thousands of years ago. It can be traced in texts, and you can study it. But I think a lot of people don't have that frame of reference.
Mm-hmm.
They don't realize the implications to us as a generation of what's happening today and how that's going to affect us in the future.
Mm-hmm. Mm-hmm. As a student of history, were you as surprised as many of your elders were that it turned out to be possible to have a black president?
No.
You weren't surprised?
I wasn't surprised.
That's interesting. I mean, because, I know I felt this myself, and I've talked to a million people kind of my age, or roughly my age, and older, who have said versions of the same thing, that if you had asked me in 2007, could we elect a black president, I would have said not in my lifetime.
Mm-hmm.
And then we did it a year later. Can you talk to me a little bit about kind of your own sense of kind of race and how it operates in the United States, and kind of maybe how your generation looks at those kinds of questions, or what you were kind of outfitted to expect growing up in the period that you did?
So I think that maybe my situation as a young white male from a middle to upper middle class family is maybe a little different than what the majority of the males and people in my demographic that would experience, because growing up from elementary school to high school in particular, a good portion of my classmates were African American or minority, Hispanic.
Mm-hmm.
And we all got along really well. And it was never a question to us that the people next to us weren't our equals. It was just assumed.
Mm-hmm.
Certainly had black friends growing up. Was exposed to people of all different races and backgrounds, economic backgrounds. Knew very rich kids and very poor kids from different races. So, and in particular, again, going to a high school that's 50% black, and knowing that these people are equals, it didn't really seem like any obstacle to me that we would one day have a black president.
Is it your sense that, among your friends or people that you know who are your age, is that a general feeling, do you think?
No. Because I think a lot of people still grow up in their own little milieu.
Mm-hmm.
From small towns to large cities. You can live in the biggest city in the world and still be somewhat isolated. And you can live in the smallest town in the world and potentially be very open and diverse in your views. It's probably not that likely as somebody living in a bigger city, but I think as a whole we've become more accepting. And in terms of Obama, he definitely had the issue going for him that he wasn't Bush,
right.
That he didn't represent what Bush represented.
Mm-hmm.
So I personally wasn't that surprised, and it's probably based on my background
mm-hmm.
with in dealing with different groups of people.
Uh-huh.
And for that, I'm exceptionally glad, and I feel blessed that I grew up that way.
Mm-hmm.
I feel like I really got a good picture of what the world's like.
Mm-hmm.
And I think it's going to be important for our future living in an increasingly global world. We're going to need to know, and in order to be competitive personally and to get ahead, we're not just going to have to be able to operate within the United States.
Mm-hmm.
And it may be that, like I said, the opportunity isn't in the United States. It's throughout the world.
Mm-hmm.
So I think again, having elected Obama as a nation, it kind of shows that we're with the world, that we're accepting of other groups of people, and that we're not isolating ourselves.
Okay. Is there anything that you feel like we should have talked about that we haven't?
Probably, but
Okay. Well, thank you.
yeah.